All right, back to work, back to work. A fantastic day comes to an end. It sounds like a lot of you guys made some pretty good money off that beautiful range reversal we talked about in last night's video. Now you know why we love ranges and how we trade that rotation right in a range bound market. Now back to work tonight. We have a lot to cover tonight. Got a big move going higher this afternoon, big breakout going higher, and some big news, that CPI report coming tomorrow morning. Put those two clues together. Big news tomorrow, big move this afternoon. That pretty much tells us exactly how to trade tomorrow. Whenever I see a big move ahead of big news, there are two types of strategies, two types of setups I look for the following day. We will talk about why I say that tonight, and most importantly, I'm going to give you guys a roadmap to make some money on that as well on Wednesday morning. Before we jump in into my favorite trades for tomorrow, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, you like these lessons, hit that like button for me. Give me a shout out, give me a hell yeah down in the comment section below. Thank you so much for tuning in, supporting our channel, and great job today. Got a lot of emails this afternoon. You guys making money on that beautiful range reversal. That's all right though. Back to work here tonight. Charts are all ready. Nasdaq triple Qs are ready. The E-mini and the SPY is ready. I have 4 important clues right now on these charts that are telling us exactly where the money making trades are for tomorrow. One of those 4 clues is right here on the 60-minute time frames. We are bullish on the E-mini and the SPY, bullish on the Nasdaq and the triple Qs. I like to use these 60-minute time frames to give us the best overall directional bias. That is one of 4 very important clues. But as we always say, right, the higher time frames, these are great for direction, but they don't help us with support and resistance, and they don't help us time the perfect entry. I have 3 more important clues that will tip us off best entry timing. Like tomorrow morning, we have news coming out tomorrow morning. We have 2 news events on our radar tomorrow. First, of course, we have the 8:30 Eastern Time CPI inflation report. That reminds us that we're going to probably see some big moves after that news comes out tomorrow morning. That will be a part of our game plan for tomorrow. We'll talk about that in a moment. And of course, later on in the afternoon, we got the FOMC announcement. Even though I don't think anybody expects them to do anything with rates tomorrow, whenever the Fed speaks, we will definitely listen. That tells me early in, early out, get those trades early, take some profit quickly, remove risk, leave a runner into the afternoon, but just be aware that there'll be some fireworks most likely around that 2 o'clock FOMC announcement. So early in, early out there. So big moves expected tomorrow morning about 8:30 Eastern Time. We'll talk about that more in a moment. And again, early in, early out, ahead of that FOMC announcement on 2 o'clock tomorrow afternoon. Back to our charts though, because it's good to know when the news is coming out tomorrow, but the money is made, of course, on those charts. So we talked about earlier 4 total clues right now. 1 clue was this higher time frame, 60. 1 clue is that CPI report tomorrow morning. I have 2 more clues on the tick charts. Now, see, tick charts make entry timing easier. This, of course, is a 4,000 tick chart linked up top there in the upper left-hand corner. And by the way, if you're watching for the first time right now, this is the 21 EMA. It's pretty much the only indicator we use to find lots of winning trades every morning in our trade room at 8 o'clock Eastern Time. I see 2 more important clues right now on this tick chart. One of them is that trading range. Now, ranges love to rotate, right? We talked about that last night on the video, and you'll see right away, right? That big move down, and now we're rotating up off of that low. This we call range rotation off the low. It tells us 2 things. 1, momentum is very strong for the buyers. And 2, we know exactly where these buyers are trying to get to, 5402, give or take a few ticks, because you can measure the amount below, project that above, and that will give us objective overhead. That is clue number 3 overall, and 1 more very important clue, and what might be the most important clue on the charts right now is this big move higher, right? This big move higher. I had a handful of students this morning who held onto their runner all the way into the close this afternoon. So now, why is the big move higher? Why is that so important? Well, because after a big move higher, I don't want to buy high up here, right? I want to buy nice and low. Whenever I see a big move ahead of big news, right? Tomorrow morning, there are two types of strategies or two types of setups I look for. One of them is very, very common. We'll cover that one first. The second one, though, it's a lot easier. I think the second one we'll talk about in the Nasdaq in a moment, that's a lot easier and it can be one of the biggest winners of the week. So let's cover first the most common scenario. Big move ahead of big news is almost always going to be a two-legged pullback. Now, when I say two-legged pullback, what I'm talking about here is getting underneath the moving average. And think about a measured move like I teach in the free video course, right? A measured move being A, B, C, D. It will usually go a bit more than a measured move, right? Like over here, right? One leg, two leg, a bit more than a measured move, okay? So again, two-legged pullback, buy nice and low. One leg, two leg, a bit more than a measured move. Now, I'd like to buy nice and low on that pullback, but I don't have a crystal ball. I'm not going to blindly buy that pullback. I would rather wait for the pullback to that 21 EMA and use what I call a failure pattern. Now, what's a failure pattern? That was run right here this morning in our trade room. We pull back to the moving average. The bears try once during the pullback. The bears try twice during that pullback. What that does is it traps in the inexperienced traders so I can then use their stops, right? Their stops, of course, to fuel that move going back up to retest the high. I'm not going to pick the bottom. I'm going to wait for the bears to come in, try once, try twice, and buy right into those stops. Try once, try twice, run those stops, and go back up to retest that high. Now, pay attention here now, because at this point, on the way back up to that high, there's always one type of add-on trade I always look for. It's a higher high in price and a move right below this low. These are called bear trap patterns in our free trading class. Look at this now again. It'll run up. It'll separate off the moving average like that. Higher high in price, right below that prior low right there. Nice strong green candle closing above the 21 EMA. And that creates your, what I call, a failure into a bear trap combination. That's the basic fundamental. Now, let's talk about some variations of this for tomorrow, because again, there is some big news coming tomorrow morning. For example, we may get a very strong rundown after that news comes out tomorrow morning. If we get a strong rundown like this, you have to expect now the bears are going to try to pull back and retest that low before they make that run going higher. To prevent myself from getting trapped buying as it goes higher, I'm going to look for what's called a crown reversal. It's basically a failure pattern with a bear trap pattern combined back into it, right? So again, in this scenario, it's a really, really big move down. I don't want to buy as it goes higher, because again, it'll try to go up and retest that low. What I'll do is I'm going to use that same two tries. I'll try to buy those as low as I possibly can. Again, in the free video course, this wraps together a failure pattern and a bear trap pattern. That way, if we do run up, we take our 1-to-1 first target, take some profit off at the underbelly of that move. This way, if they hold the underbelly off that move and they retest that low, yeah, see, now this becomes what I call a double bottom retest. These are oftentimes the most lucrative trade in an overall bull market, because anybody who sells on that pullback, they take their profit now at that low. Sellers up here become buyers down here. Now we can look for that same one try, two try. All we need now is a failure pattern. And remember, again, as it runs higher, it'll always be that failure into trap combination. And in this case, it'll want to go all the way back up to retest the high. So again, I like the idea of a two-legged pullback, but if they pull the rug on this thing with that CPI report tomorrow morning and it really runs lower, be aware of that attempt or that desire to pull back and retest that low before it runs back up again. Because of that, it's a bear trap entry or a crown reversal entry, as we call them, once they retest the low. See this right here? That's the last place you want to sell right? That's the worst spot to sell. Hopefully get some rookies coming in, get them trapped in twice, squeeze those stops to failure into that bear trap combination. I know a lot of you guys, by the way, made some good money today on that failure off of that low. So same basic idea, right? Trap those bears in and squeeze those stops back up to retest the high. Now, let's slow down for a second, because I know most of you guys watching right now, you know these patterns. You're making money on failures, traps. You know why we love ranges. But if you're watching for the first time right now, this might be a brand new language for you. I do look at things quite differently here on these YouTube videos, right? So if you're here for the first time, and if none of this makes any sense, don't you worry. I teach all these entry patterns. I have hundreds of examples of failures and traps. I teach everything in so much more detail in our free video classes. I'll put a link up top there for you, upper right-hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room, so you always know where the best winning trades are going to be each day. Then most importantly, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns. You'll learn failures, and you'll definitely learn traps, and a hell of a lot more. Guys, I cover the entire roadmap in that free video course. The markets are so good right now. If you're not making consistent money every day, if you're missing the best entries right now, if you're still struggling to qualify for a funded account at Apex or TopStep, hit that link up top there. Take that free course. It is perfect for someone trying to make the jump into full-time trading. Also be aware too, I'm going to put all the important links tonight, the description of the YouTube video. The free class links will be down there. Definitely start there first on the free classes, learn the basic strategy, start making money on your own. Also too, we trade together every day in our trade room, 8 o'clock Eastern time. I'll put that information down bottom as well. And also too, I post a lot of updates on Twitter, videos, charts, psychology stuff on Twitter or X throughout the day. If you're on X or Twitter, give me a follow. All those details, description of the YouTube video. Now, one more variation of this, I mentioned earlier, there are 2 types of strategies we use when you get a big move, head of big news here. We're covering the first one right now, one last variation, and we'll talk about that second strategy here in a moment here on the Nasdaq. I mentioned earlier, I want that 2-legged pullback. I'm going to trap those bears in and run back up. But you know what? Sometimes there's so many buyers down here. Sometimes we get that 2-legged pullback and it just kind of boing and runs right back up again, right? When that happens, this can be very difficult because we don't get the signal we want to trap in those bears. When this happens, watch closely. If we run lower, and again, this would be off some big news, right, tomorrow morning. If we run lower and then pop right back up again, watch for the market now to begin grinding higher. The grinding motion higher is the dead giveaway. This becomes a V bottom reversal. Now, V bottom reversals are very easy, but they're very difficult on the emotions. Because if you're anything like me, when this thing starts grinding higher, you're going to get frustrated because you're not in that move right where you want to be back here. Watch closely. Draw a trend line off the highs, bring it down off that low. That creates a new channel. Now remember, when the market V bottoms like this, a lot of the reason why it does that is because sellers are getting squeezed. Eventually, the buyers will want to come in again. And when they do, they'll want to buy nice and low. How do we buy nice and low? Underneath prior swings. This is where the money is made on a V bottom bounce off of that low. Again, hopefully we'll get that 2-legged pullback, trap the bears in and squeeze them back up, right? Hopefully that is the case we'll get for tomorrow. But if we don't, right? If it just boings off that low, right? Mark that high, mark that low. And remember, I love traps. It doesn't have to be a trap though. It could be a trap pattern like this one. It could be a failure pattern below the 21 EMA, failures turn into pullbacks, pullbacks into strength. And of course, we know the market wants to go back to retest the high, right? Big, deep pullback, back to retest the high. So again, V bottom, grab a failure, a trap pattern, right? A failure pattern, a pullback combo, a strength trade. Again, this will make a whole lot more sense once you guys get through that free video course I mentioned earlier. All right, guys, now you know more about that first kind of core system, that first core strategy we look for. Big move, head of big news the following day, along with some variations of this, double bottom reversals, and of course V bottoms as well. Now, that covers the most common scenario after a big move ahead of big news the following day. Let's look at the Nasdaq now. The Nasdaq's getting a bit lonely over here. We talked about earlier here how the 60-minute time frame, we know we're bullish, right? That's the easy part. You probably don't need me right now to tell you we're bullish right now. The hard part, right, is timing the entry. Over on the Nasdaq has a couple different clues, very similar though to the S&P. The first most important clue right now on the Nasdaq is that trading range. Now look what happens on a range market. And again, if you watched last night's video, you know probably a lot of how this works already, right? But ranges love to rotate. We go down, again, two-legged pullback, right? A bit more than a measured move. And again, it rotates off of that low. Now, whenever we see a rotation like this that exceeds that pendulum swing, right? It goes through that pendulum. That's a breakout. Now, whenever it's a breakout pullbacks become something we look forward to. As I always say, it's not an if, it's a when we get that breakout pullback. So all the levels, right, all these highs over here, all these areas of resistance now they become key areas of support. So one slightly different clue, but very similar on the Nasdaq is it's a very strong bull move up, break out of that trading range, expect a breakout pullback. Another very important clue is the size, right, of that move. That's a huge move on the Nasdaq this afternoon. Big moves tell me I don't want to buy high up here, right? I want to buy nice and low. And how we buy nice and low? We buy nice and low with that two-legged pullback, right? Look at how great that sets up, right? One leg, two leg, right into the top of that range. And again, right, I wish I'm not good enough to pick a bottom on this, right? I wish I was, but we're not that good yet, at least not yet. Time that, right, two tries here. One try, two try. Don't pick the bottom, right? Don't make the mistake picking the bottom. Trap them in, right? And then of course, squeeze those stops for that failure into that, what was it again? Yeah, that bear trap combination as we make our way back up to retest those highs up overhead. And again, right, that failure into trap combination could also be a big move down, right? Big move up the news, a crown reversal. Keep an eye out for that double bottom, two try failure, right? The same basic stuff we talked about on the S&P as well, right? Just make sure you remember though, remember, if it really races going lower, right? If it really rockets going lower, it'll want to come back and retest that low, then back up. That's what we look for, bear traps or crown reversals on the first one. Then on that double bottom reversal, that could be a lot more aggressive with that two try failure. Again, we talked about that a moment ago on the S&P. Okay, so all the same stuff in the S&P can be applied. The Nasdaq, I'm watching this breakout leg right now. That will give me, because anytime we see a range breakout, the breakout leg is the measuring leg. That now becomes the measured move up overhead, in case you're wondering where that comes from next. Now, with that said, second strategy, whenever we see a big move ahead of big news, is a trading range, right? Ranges. Now, if we're lucky tomorrow, we'll get a big range up here. Ranges are the easiest way to make money. Now, I know that seems crazy because ranges can be tricky and sloppy and messy, but I'll tell you, once you learn how they work, trust me, you'll love these as much as I do and we do every morning in our trade room. There are two basic ways I trade a range bound market. Now remember, ranges are magnets and they love to rotate. Okay, they're magnets and they love to rotate. So once I find that trading range, what I'll do is look left, find areas of support like prior swings, like that breakout pullback zone. Find prior areas of support. I want to buy off support levels underneath a bullish trading range. Again, had a big news tomorrow. We may get chopped up in a trading range at some point tomorrow before the CPI or before the FOMC. Now, as always, I don't pick the bottom on this, right? Stop going all or nothing on these trades, right? Wait for it. Wait for the breakout. Wait for that pull back to that 21 EMA. Let the bears come in and try at least twice. Why twice? Because then I got you, right? Then you're trapped. And now I can run your stops and fuel that move going back up into that trading range. If you recall earlier, we talked about that failure into that bear trap combination. This is exactly where that pattern combo will come back into play. The reason why I said earlier, though, that these situations can make your entire week is because now we know that ranges love to rotate, right? We know how pendulum swings work. So the amount below the range, the amount above the range, see, now that is where we place our final targets. What I always do is take half the trade off at the other side of the range, right? I'll take some quarters off on some trend lines up there and leave a quarter up for that pendulum swing. We talk a lot more about trade management and scaling out of our winners inside the free video course. So make sure you guys grab that link up there in the upper right-hand corner, right? But this is why I said earlier, right? This really is the easier way to make money. And it can be one of the biggest ways to make money because of the way ranges love to rotate, right? So if we go sideways tomorrow morning, grab the range. And again, right, make sure we go out now, trap those bears in, try failure, grab that bear trap combination. And, remember, sometimes what happens is we'll get this thing going up into a range, right? It'll get that strong run down. We'll get that bear trap right in. We'll go back up. The bears will hold the underbelly of the range because ranges love to break out pullback. We'll get our first profit target. It's a winning trade. But now the market comes back, retest that low. We see a ton of these in our trade room. Remember, this is not a reversal, right? A retest of that low is a better opportunity because now anybody who sold right here, they're now buying their way out right there. Sellers become buyers, then rookies come in, right? And I'm so happy that new traders learn to trade every day of the week because this is a great place to teach them how this stuff works, right? We all pay our education, we all pay our tuition to the markets, either by a mentor or taking losses. I took a ton of losses like this when I was a new trader. That's probably why I'm such a good teacher of this stuff here almost 20 years later. Trap those bears in. These double bottom reversals, again, they're not a reversal for the bears. They're simply a retest there. And now we can be a lot more aggressive on the entry going higher, right? So kind of keep in mind that same game plan, again, could also be a V bottom right off that low, boing, right? V bottom back up, find that channel, buy that first test right off the low of that channel. Now, there's one more thing you want to keep in mind here for tomorrow, and that's the fake out breakout. Okay, these can be tricky, so pay attention to this, right? Okay, so we find our range. I want to buy underneath and back up again. But these markets, they're going to throw some curveballs at us every once in a while. Oftentimes, they'll go higher first. Okay, then once they go higher, remember, we're way high up right now, right? Nobody wants to buy high, so we use a crown reversal pattern. Buyers trying once, buyers trying twice. It's a lower low in price and a bull trap off the high, crown reversal pattern to sell off of that high, right? Always that bull trap short off the high. Now think about this now, right? The amount we go above the range, the amount we go below the range. See, now we know where our profit targets come off. And also too, now we know where we can trap in those rookies again. Again, don't pick the bottom on this. It'll oftentimes overshoot that pendulum swing, but once they pull back, bears once, bears twice, now you got them, right? Now you got them. Take your profit on the short off the high, flip that sucker now long, try failure, failure into bear trap combo. And if you understand how rotation works, now we know, right? Take some profit off at the top of that trading range half off there. And again, measure out the amount below, the amount above, and that will give you an idea of where to put that final target there to leave that runner. One of the best things about range markets is once you know where that range is, right, that becomes the magnet. We simply measure the amount above, measure the amount below. That gives us entries, that gives us targets. And at that point, it's just a matter of trapping in those rookie bears, getting foolishly short into support below the range, and then adding on to our position with some bear traps as we go higher. All right, guys? Boy, that is the game plan. The second game plan, the range-bound game plan tomorrow, probably after CPI, before the FOMC tomorrow afternoon. Boy, I'm getting excited just talking about this right now. I got goosebumps right now just thinking about these trades setting up for tomorrow. But now that's the plan for tomorrow morning. Don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us. The easiest way to make money in these markets is to learn and trade along every morning in our trade room. Again, I'm going to put all the important links tonight, the description of the YouTube video. Start first on the free video course, learn the strategy, start making money out there on your own. And again, hopefully sometime soon I'll see you trading with us in the morning trade room at 8 o'clock Eastern time. Guys, a fantastic job today. We got more coming tomorrow. Let's make some more money tomorrow morning. In the meantime, be well, be nice to each other out there, and you better be here next time, right? Adios, amigos. Bye for now.